But let's get a move on then and put the spotlight on Kalyan Jewellers to talk a little bit more about their Q4 performance because it has been pretty stellar. The Q4 PAT has doubled. What is the outlook when it comes to gold prices trending higher and demand trends? Ramesh Kalyanaraman is the ED of Kalyan Jewellers and now joins us on the show. Many thanks for taking time out. So, what's it like really when it comes to demand trends in Q4, the month of April? There has been a solid increase in gold prices. How is that influencing purchasing decisions and demand trends?
Yeah, so last year, as you see, it was extremely good. The revenue growth was excellent, and the PAT growth also was good. Margins were under control on the store level, and demand per se, if you look at this financial year, the start has been good. We checked the revenue for the first 40 days because that will be an apple-to-apple comparison because Akshaya Tritiya last year was in April and this year in May. So the first 40 days of the quarter seems to be positive. If I tell the revenue growth number, it will be not apple to apple because we have added stores, but SSG levels have been strong. It is a double-digit SSG growth, and this is coming after Q1 SSGs were 15% last year. So over and above that, again, there is a double-digit growth in revenue. The momentum is very positive.
Okay, fair enough. And despite a higher growth in the studded ratio versus what we saw last year, there was still pressure on your margins. So, what is the outlook then on your overall margin picture?
No, margins are because again, gross margins will come down because we have moved to a FOCO model franchisee wherein the margin share goes to the franchisee partner as well. Otherwise, on a store level, margins were stable over the past 4 quarters when compared to the previous year. And if you look at PBT, the PBT margins have also improved in Q4 versus the last Q4. So there is a margin growth in PBT levels. But if you look at gross margins, there will be a degrowth because we have moved into a franchisee model wherein we share margins with the franchisee partner.
Okay. I also want to talk about what's happening in the Middle East region because there too it seems that growth has been subdued. What would you actually attribute this to?
No, growth has been there in Middle East. There also the SSGs have been in the range of 6%, 7%, which is stable. India, of course, the SSGs level have been stronger than Middle East. India is now going through a phase of shift from the unorganized to the organized segment, which is not there in Middle East. Middle East, as all of us know, it is already an organized geography. So there, Middle East expansions were almost all the revenue growth was SSGs, and we have started our first franchisee operations in Middle East last year, and we think that's going to scale up, and we have signed 5 more showrooms for the Middle East region.
How much of your total projected future sale will come from Middle East? Can you give us a percentage?
So India, we are India heavy, but India is always the biggest market, and Middle East early teens, that is what we target for, and that has been happening for the past many years.
Right. I know that you did touch a little bit upon your overall margin levels, but we understand that there you've been focusing on the FOCO stores. There has been a little bit of focus on that. So what is the outlook then on your margins? What would be a stable level that you'd pencil in light of this?
So margins on a gross margins level, because it will be confusing if I talk about the EBITDA margins because it is going to degrow. And there will be further reduction in the EBITDA margins, and I will not be able to give a forward-looking statement. But again, PBT margins will improve more than the revenue growth. So that's the only takeaway which I can give as you speak.
If I compare your numbers, let's say what Tanishq has reported, Titan, they've gone through a challenging quarter. The slowdown was there, but that's not the story for you. Is this largely because of market share gain or new store addition which are making the numbers look good?
Both are there because SSG's level have also been strong. We have SSG of around 17% in Q4. And also because of store expansion, which is also happening. Last year, we opened 57 showrooms in India and 2 showrooms in the Middle East. So both are there, but SSGs have been very strong. And it's not fair to compare two players, because markets can be different, campaigns can be different, and competition can be different. Kalyan has been growing in this space, in this space for the past 1 year.
Okay. Would you be looking at experimenting with different formats as well? The impression of Kalyan Jewellers is that it is always in the so-called high-end and the luxury end of the jewelry market. Would you be looking at experimenting with very different formats also, which could be incubated by Kalyan Jewellers but will have different experience, different store and different clientele?
No, so again, we are not a premium positioned player. It's middle class and upper middle class. That's the target audience which we have. And that is where we focus also with the brand Kalyan Jewellers. We are a very hyper local brand. Around 50% plus come from wedding. And again, this year, the focus again for Candere is going to happen. Candere is a lifestyle jewelry segment. It was an 100% online stream if you look at 1 year before. Now we have started physical store expansion. Last year, we opened 11 showrooms, and this year, as we speak, for the first 40 days, we have opened 7 Candere showrooms. So there will be some focus on Candere store expansion as well, over and above Kalyan Jewellers.
Okay. How much appreciation has happened only because of the appreciation in gold prices? Because that again is a large factor why a lot of jewelers have told us that the top line is looking different, because jewelry prices are a function of underlying gold prices, which may be a pass through, but it gets captured in your revenue.
No, it's not like that, wherein you should look at the customer point of view. Customer comes in with a particular budget. So their budget is not going to vary even if the gold prices come down or go up. So if they have a budget of say 2 lakhs, they will end up buying 2 lakhs. So gold prices are not related to revenue. The only area is that if the gold prices is low, the volume can be higher. If the gold prices is high, the volume will be lower. And the only area where the gold price plays an important role is when there is a sudden spike or sudden fall in the gold price, wherein customer might wait for a week to see where this gets settled down and then come for the purchase. However, again, H1, when the gold prices were low, also we were growing in revenue, right? And H2, the gold prices were climbing, even then we were growing. So that is not the area where customer point of view, gold prices does not play an important role in their overall budget.
Okay, great to have you then on the show, and thank you so much, Ramesh, for highlighting what's really happening with the business and what, of course, is the visibility going forward.
If you like this video, then like, share and subscribe to ET Now.